Hey, what's up YouTube? This is Jesse with Keeping It Real Finance, the channel that always has your back and tells it like it is. Today we're going to be talking all about the MACD. So if you've never heard about the MACD before, this is the video for you. This is an indicator that a lot of traders use to track momentum. So we're going to be breaking that down today, how you can use the MACD, where you can find it, how you can apply that to projects that you're looking at getting into, or as well as projects that you're already into. So you're not going to want to miss this video. Lots of good information, all right? So, as always, make sure to like the video, subscribe to the channel, and if you click the bell, you'll be made aware whenever I post content just like this, all right? Now let's get it going. So, Jesse, what is the MACD? Well, MACD stands for Moving Average Convergence Divergence. And this is calculated by subtracting the 26-period exponential moving average from the 12-period exponential moving average, or EMA. Now, the MACD is a histogram which is designed to reveal changes in strength, direction, momentum, and duration of a trend. So it does this by triggering technical signals when it crosses above or below a signal line which is set to 0. So movement above or below the line is known as either a bullish or bearish crossover. Now, you need to be mindful of that, but because the MACD is based on historical data, occasionally it can give a false positive. And so some examples of this would be if we had a bullish crossover followed by an immediate drop in price, or vice versa, if we had a bearish crossover followed by an immediate jump in price. So now we're going to look at some examples of the MACD. And by the way, one of the best sites I've found for charts and where I'll be taking the charts from today in this video is tradingview.com. So if you want to step up your trading game, tradingview.com offers various membership options from free with ads up to premium with far more features, all right? Now, I'm going to do a life hack on TradingView in the future, and I'll break down more of what TradingView has to offer then. Just know now that there are referral links in the video description if you want to step up your trading game into one of those premium options. And if you follow the link, you basically will get a $30 bonus. The channel gets a $30 bonus. That's how it works, all right? So be mindful of that. Now, let's take a look at the Bitcoin chart. So it's pretty easy to follow momentum looking at the MACD that there was a bullish crossover between February 2nd and 3rd, followed by bullish divergence of the EMAs. Now, momentum really didn't shift bearish until February 21st, followed by a bearish crossover February 23rd. In that time, the price moved from 38,000 to 58,000, or over a 65% increase. Now, what I like about the MACD is it is also color-coded, so you can easily see dark greens are a rise, whereas a light green is a cool-off. A dark red is a drop-off, and a light red is a rebound. So the price bottomed out February 21st at 43,000, but then rebounded almost up to 62,000 by March 13th. Now, moving to current, Bitcoin bottomed yesterday and appears to possibly be on the rebound, though we have not had a bullish crossover as of yet. Now, let's take a look at the Bittorrent chart. So if we look at the chart for Bittorrent, you can quite clearly see the recent spike in price in the MACD. We had a wide bullish divergence. Now, volume is dropping off, though, indicating we may be running out of gas. However, we haven't had a bearish crossover as of yet, but we have had the divergence between the EMAs lessen. Now, let's take a look at Cardano. So this is a good example of a fake out in the MACD, in my opinion. So you can see where we bottomed on March 15th. We thought we were rebounding, but the crossover wasn't a clean X, but instead the lines, the EMAs that is, aligned with each other March 19th, and we dropped again from there. So what this chart tells me is that we have consolidation between a 98-cent support and a $1.48 resistance. Now, what we're looking for here is for the lows to be less and less, followed by a breakout upwards. Now, none of that really matters if you're staking your ADA, but it would matter for buying in. That's where the MACD is really important. Now, let's take a look at VeChain. So we had a solid momentum upward with VeChain from February 28th all the way through March 21st for 3 weeks of upward momentum. Now it's cooled off in the last couple of days, but what's interesting is we don't have a clear-cut bearish divergence, but instead the EMAs have aligned. Now what this tells me is we're feeling out the current price level to see if support will hold. Now let's take a look at NEM. It goes under the ticker symbol XEM. So this is an interesting chart that I've been watching for a couple of days now, where momentum in the MACD appears to be building for a breakout. Now we have yet to have a solid punch upwards in a bullish crossover, but that could be on the horizon. So let's take a look at StormX. So I bring up StormX because I had a comment of somebody that felt like maybe they FOMO'd into this. So you can see this one really took off around March 13th and peaked in momentum 1 week later on the 21st. Now since that time the momentum has been trending downward, but we have yet to have a bearish cross, which again tells me is testing support levels. Now lastly, let's look at Theta, because Theta has been on fire lately. So you can see Theta has been hot almost the entire month of March from the 3rd through today. You can see the divergence of the EMAs has been widened. And so is it running out of gas? Too early to tell, as we just don't have enough data to suggest that yet, right? The bottom line is that the MACD is another tool that you probably want to add to your tool belt if you're going to be investing in crypto or stocks, as a way of telling you where the momentum's at and are you getting in at the right time. That's the entire point of this. It can also tell you when it starts trending downward. If you're swing trading, maybe that would be a time to get out, all right? Now, I really like that you can get a feel for momentum, which stops you from FOMOing into investments at the wrong time. The MACD is also really easy to read, as you saw in the examples. So we want the blue EMA line on top and by a wide margin. That's about it, right? We also want a solid crossover that is definitive in the form of an X. If the two EMAs are aligning, that's not really definitive. Now, I also think you can tie in the MACD to upcoming news, and that's where you may really be onto something. So if you're following the momentum, you know news is going to break, at some point in the future, then that could all come together. Now, I'll probably do another video in the future on the RSI, which is another tool that you can use along with the MACD. But specifically to this video, I just wanted to talk about the MACD and how you can track momentum. So I hope it's helpful for everybody out there. I think there's a lot of traders that we just buy in sometimes and we're not sure if it was the right time. Well, this will tell you if it's the right time. That's what's the beauty of it. Now, it is based on historical data, but like everything else that's based on historical data, it can somewhat predict the future. Somewhat. Not entirely, and it's not accurate all the time, but it'll get you in the ballpark, right? So that's why it's important. Okay, so that's it for today's video. As always, if you enjoyed it, make sure to hit the like button. Don't forget that I'm also on Twitter at KIR Finance, where you will find me tweeting and retweeting on a regular basis. And for a friendly reminder, this is Jesse with Keeping It Real Finance, the channel that always has your back and tells it like it is. And I will see you on the next one. Later.